Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at iShares Silver Trust, ticker SLV.
If you find our talks useful, please consider subscribe, like, and comment underneath.
It is Saturday, January 24, 2026.
Yeah.
And we are looking at a ticker that is currently making the rest of the market look like it's, well, standing still.
Standing still is being polite. I was looking at the performance data for SLV right before we started, and I honestly thought my screen was glitching.
Yeah.
I had to refresh it twice. We're talking about a total return in 2025 of 147.86%.
It's a staggering number. It really is.
It's almost absurd. You know, for a skeptic like me, a triple-digit return on a commodity, that sets off every single alarm bell.
Sure.
This isn't some hot tech IPO. This is silver. It's a rock. A shiny one, but still a rock. And yet here we are, mid-January 2026. The price is sitting at $84.56, and it's acting like a tech stock on steroids.
It certainly looks that way from 30,000 feet, but you really have to, peel back the layers to see what's really going on here.
Well, that's why we're here. Because the question on everyone's mind is, did we miss the boat? Is this the absolute top of a bubble, or is this just the start of something crazier?
That is the multi-billion-dollar question. And I get the skepticism, I really do. When a chart goes vertical like that, your first instinct is to run.
Right. It feels unsafe.
But you have to look at the context. That 147% return, it didn't just happen in a vacuum. The underlying benchmark was up around 149%.
So SLV is just doing its job, tracking the metal.
Exactly. It's doing precisely what it's supposed to do. But that doesn't explain why the metal itself is suddenly the hottest thing on the planet.
Right. Why now? Why silver in 2026?
Because the entire story has changed. I don't think we're looking at a speculative bubble. We are seeing a structural break-in the supply and demand fundamentals.
A structural break.
Yeah. If you zoom out, the 10-year annualized return is over 17%. That tells me this isn't some flash in the pan. This is a long-term repricing.
You're hinting on that super cycle idea I keep hearing about.
The data points that way. We're seeing a collision of monetary policy, industrial demand, and just raw physical scarcity all at once. So, yeah, $84 might feel expensive today, but if this thesis holds, we're probably just in the middle innings.
Middle innings. Okay, before we get too far ahead of ourselves, let's back up. Let's be really clear about what SLV is, because it's not a mining stock.
Correct. And that is a crucial distinction. The iShares Silver Trust. It's a commodity trust. It's not a business. No CEO, no marketing, no one digging holes.
So when you buy a share, you're basically buying a receipt for physical silver.
A tiny piece of a massive pile of silver bullion. Yeah. It simplifies things. No earnings reports, no debt.
Right. You're taking company risk or execution risk completely off the table.
Exactly. And the scale is huge. As of mid-January, net assets are around $47.56 billion.
So a lot of silver?
A mountain of it, mostly in vaults in London. And since there are no earnings, the only thing that moves the price is demand. And that's where the story gets really interesting.
Because it's not just jewelry and silverware anymore.
Not even close. That market is stable, but it's boring. The real driver is industrial demand, specifically the green energy transition.
Solar panels, EVs, we've heard that story for a few years.
We have. But here's the twist that really lit the fuse. It's the collision of green energy with the AI boom.
AI. How does AI need silver?
It's not the chatbot itself, it's the brain. The data centers, the high-performance semiconductors, these things run hotter and faster than ever before.
Okay.
And silver is the most conductive metal there is. For electricity, for heat, you need it for the chips, for the soldering.
Yeah.
It's critical.
So as chips get more powerful, you can't use copper anymore.
You hit a physical limit. So silver goes from being money to being a critical tech component. That creates a price floor that it didn't exist a decade ago. It changes the whole valuation.
That's a huge shift. So if you're bullish on AI infrastructure, you almost have to be bullish on silver.
You do. And then you flip to the other side of the coin. Supply. We are in a deficit. Mines are not keeping up, and the vaults are tight. This isn't just paper speculation, it's a raw material shortage.
And that's SLV's moat, right? I can't just go buy a 1,000-ounce bar and stick it under my mattress.
Right. The liquidity and access.
Yeah.
That's the moat. It tracks the global benchmark price perfectly.
Right.
For any institution that wants to play this, SLV is the easiest way in.
Okay, fundamentals make sense. But let's look at the chart, because that's where I get vertigo.
Let's do the technicals.
We're at $84.56. The chart mill technical rating is a 10 out of 10, a perfect score, clear breakout, higher highs, higher lows, everything you want.
It's the definition of a strong trend. It's a textbook leader.
It is, but,
Yeah.
and I have to be the skeptic here, the RSI, The relative strengths index is well over 70.
It's very hot, no denying that.
And historically, that means it's overbought. It usually means a pullback is coming. It feels like we're chasing.
That's a valid concern, for sure. When something is up 31% in just a few weeks, that's FOMO. But in a strong parabolic move, an asset can stay overbought for a very long time.
So you just ignore the RSI.
You don't ignore it, you contextualize it. I'm looking at support levels, and there's very strong technical support around the $80 level.
So a pullback to $80 wouldn't worry you.
Not at all. In a move like this, a $4 or $5 dip is just noise. It's profit-taking. What matters is the velocity. This kind of momentum suggests institutional money is moving in.
Speaking of institutions, let's talk about the whales. What's the options market telling us?
The footprint is massive. Open interest is sitting between 9.8 and 10.2 million contracts.
Is that a lot?
It is exceptionally high. That's up to 113% of the 30-day average. Interest is accelerating, not fading.
Okay, but is it bullish or bearish interest?
That's the key. It's overwhelmingly bullish. We're seeing daily volume running 60 to 65% call options.
That's in the price going up.
Right. And it gets even more interesting. We're seeing huge, unusual activity in the $72,000 and $65 strike calls.
Wait, if the price is 84, why buy calls at 65? Those are deep in the money.
Exactly. But look at the expiration dates. March 2026, January 2027.
So they're buying time.
It's a strategy called stock replacement. They get almost the same exposure as owning the stock, but they tie up less capital. It's a classic institutional move.
That's a powerful signal. They're positioning for the long term, not a quick flip.
Correct. This implies they see this run continuing well into 2027.
Yeah.
And the whole media narrative has shifted. Silver is being called 2026's hottest trade.
Funny how 150% gain changes sentiment.
Success attracts attention. And with attention comes rumors.
I've seen the chatter about a $100 target.
The $100 target is the big psychological number. A lot of that is driven by speculation about central bank buying if they start diversifying out of gold and into silver.
It could get wild, but that's speculation.
It is. But from here, it's less than a 20% move away. So it's not totally out of the question.
Okay, so before everyone runs out to buy SLV, we have to talk about the bear case. What could go wrong here?
Right. They call silver the devil's metal for a reason. It is incredibly volatile. Goldman Sachs just put out a warning about extreme price swings.
Which is bankers speak for, this could drop 20% in a week.
It absolutely could. The same illiquidity that sends it screaming higher can create air pockets on the way down. Geopolitical shocks, a surprise from China, anything could trigger.
And the macro risk, the Fed.
That's the big one. This entire bull case partly relies on the Fed cutting rates and the dollar weakening.
But what if inflation comes back and the Fed has to hold or even hike?
That is the danger zone.
Yeah.
If you can get a guaranteed 5% on a bond, silver, which pays you nothing, looks a lot less attractive, money would flow out fast.
And just simple profit taking. After a run like this, people are going to want to lock in gains. A drop to $75 isn't out of the question.
And that wouldn't even break the long-term trend, but it would certainly hurt if you just bought in today.
So, knowing all that, the volatility, the Fed risk, the overbought chart, what's the final verdict?
Despite all of that, I'm still giving SLV a bullish score of 9 out of 10.
A 9. That's aggressive.
I respect the risks, but the bigger picture is just too compelling. The structural demand from AI and solar, that's a multi-year trend. The technicals are perfect. And the institutional options flow confirms the big money is in.
See, you're buying with the supercycle thesis?
I am. The elevator pitch is this. SLV is the best way to play the 2026 commodity supercycle. You have physical scarcity hitting explosive industrial demand. Yes, it's overbought short-term, but the buy-the-dip strategy is in full effect here.
And this is a multi-year hold, not a quick trade.
Absolutely. This is a hold into 2027. For tactical traders, though, I'd watch that $80 level. A pullback to that zone could be a great entry point.
Don't chase the green candles.
Exactly. And I'll leave you with this. If those $100 rumors come true, that's another 20 to 30% upside from here. The trend is your friend until it bends.
20-30% on top of 147%. Wow. Okay, everyone, please check your own risk tolerance. Commodity volatility is no joke.
Well said. Know why you own it.
If you enjoyed this breakdown, make sure to subscribe and leave a comment on what ticker we should cover next.
See you next time on Smart Wealth with Jaza.